Taxes season is here. If you're a foreigner living in the US, you may be wondering how to deal with this. In the US, you can deduct certain personal allowances depending on your marital status and number of dependents. Also, you can add expenses such as childcare and commute to be deducted from the taxes and get a better return. In this video, we will show you some relevant tips to deal with taxes. However, this information is exclusively based on our personal experience and research, so please consult a professional tax advisor before making any decisions. How to file taxes in the US as a foreign national. If you are a foreign citizen who works in the US, you may wonder how to file your taxes in both countries. Depending on your residency status, how long you have been living in the US, income sources, and other factors, you may have different tax obligations and benefits. The US is one of the few countries in the world that taxes its residents on their worldwide income, regardless of where they live. That means that if you live in the US and are considered a resident for tax purposes, any income from Chilean sources must be included in the US tax return. You need to report your global income to the IRS. Sounds unfair, right? Well, don't worry, there are some tax benefits that can help you reduce or eliminate your US tax liability, such as the Foreign Earned Income Exclusion, FEIE, or the Foreign Tax Credit, FTC. To file your taxes, you can use local tax offices such as H&R Block or websites such as TurboTax and SprintTax. TurboTax is useful for residents and SprintTax for non-resident aliens for tax purposes, but we'll get to that. First step, residency status. The first thing you need to determine is your residency status for tax purposes in both countries. This will affect how much income you have to report and how much tax you have to pay. How to calculate residency status in the US? Not all foreign nationals are considered residents for tax purposes. The US has two tests to determine your residency status: the green card test and the substantial presence test. The green card test, you are a resident for tax purposes if you're a lawful, permanent resident of the US at any time during the calendar year. The substantial presence test, you are a resident for tax purposes if you were physically present in the US for at least 31 days during the current year and you were physically present in the US for at least 183 days during the current year and the two preceding years, counting all the days in the current year, 1/3 of the days in the first preceding year, and 1/6 of the days in the second preceding year. You can calculate this using websites as TurboTax and SprintTax. If you meet either of these tests, you are considered a resident alien and you have to file a Form 1040, reporting your worldwide income and claiming any deductions and credits that apply to you. If you do not meet either of these tests, you are considered a non-resident alien, and you have to file a Form 1040-NR, reporting only your U.S. source income and claiming any deductions and credits that apply to you. You may also have to file state and local tax returns, depending on where you live or work in the U.S. I hope this video was helpful and informative for you. More details in our blog, link in the description. If you like this video, please hit the like button, share it with friends and family who might benefit from it, and don't forget to subscribe to our channel for more content tailored just for you.